trade the MBI fractals in a compelling story, let's take a look at what a fractal really is. It's simply a pattern that repeats at ever smaller scales, forming irregular shapes that really you can't represent in geometry, and they're very useful in modeling things. But I also believe you need a second component, and that is the chaos that comes with fractal setups. And for that, we're looking for what appears to be random and unpredictable events, but that with small changes in them create some really unique outcomes. And when we're looking at this type of situation, I like to refer back to just a basic chart so that we can get a practical application of what it really means. And so we look at a regular chart that has your standard indicators, and then we flip it over to what my chart typically looks like, where I have my fractal pattern that gives me trend models that I convert then into green and red trend. And this helps us associate whether the market is likely to retrace or move forward. I then put in those MBI and GAMs that I'm circling with the colors that kind of give us the bottoms of particular moves. And then we go on and we start adding in more depth. And we get the shakeout indicator in. Then we start looking at the fractal dots, which are buys, sells signals. And the chart starts to get a bit more complicated. And, at this particular point, it's a foreign language to some already, and it just accentuates itself at this particular point when we add in the extreme histogram and these violent little shoot-ups with these ranges and the extreme histogram also. So what do? We actually get more detail, and then we even add in a few other indicators just to give us a complete and broad range view of the overall market. So to help define it, what we need to do is actually reduce it. So we go back down to this expanded ratio histogram, which actually has more lines than the normal one, and the reason being is we want to extrapolate and show you a little bit more about what some of the fractal strings kind of look like in a visual format, even if you're not seeing the math behind the scenes. It's where it's derived from, and that's critical. But the reality is that this chart has too much information because price is still on top of it. And when we look at that extreme histogram and our ratio histogram, we have the two elements we're looking for, the string and the chaos. And so we don't need price to get in the way of this particular chart. So the next thing we actually want to do at this particular point will be to literally eliminate price as an element. And without price, we can now start to draw in a string and say, okay, what does a string fractal actually look like? Well, convenient, I'll bring one in for you. And so we look at the string fractal, and that's fine and dandy, it's very complex, but it doesn't give us the chaos. And so for the chaos, I like a drop of water hitting a pond and the ripple effect, and you can see this exaggerated explosion back up. And if you look at the extreme histogram and follow the line, you get that explosion and then the taper off of the readings. And this is how we use the chaos coordinated with the string, and you can see that the colors are coming back from the background look very similar, and that's because the math is similar. However, it's not practical for this application. What we need to do is expand this string and then start to take out a little bit more of a linear approach, and by that I mean we have to create a pathway that we can then pull the information out from here. And once we're able to then isolate the very components within this fractals, we can then slide across and put that into a format that will give us specific signals to flip on, flip off. It allows us then to color a chart. We get our immediate explosion of an indication, and we're brought back to what? A single dot on our chart. And as we pull back from this single chart, all that math that went into that deep complexity is brought back to these arrows that point out, without price on it, that we can identify down and up based on the simple arrows. And then the next thing we would want to do, well, we're going to want to bring price back into it so that we can actually see if we're correct. And we just scroll right back through there, and bingo, price comes on. And miraculously, or not, because it's really not miraculous, it's just about the math and what these computers are looking for in very specific setups. And when we identify these and take out some of those additional extra strings that were in the expanded ratio histogram, we get a little bit of a cleaner chart, but it doesn't have to be clean to be concise and to really tell us what we're looking for. Because at the end of the day, if we bring in some of the other indicators, your favorites, MACD, and some of these other weaker ones, we can scroll out and begin to look at really what the differences are. And I didn't even include the first trade, but starting here, you can see it's not very effective in calling the correct locations. You get one or two decent buys, and we're talking about the end of 2012 here, where it's been an incredibly bullish period, and it's been doing poor. So you think, okay, well, maybe I need another indicator. Well, let's put stochastics. Even worse. It would have you chopped around all over the place. So many back and forth signals, and most of them are lagging, and that just is not sufficient enough in today's trading to be effective. And that's because the computer models understand what your intentions are with these various indicators, and whether you think you're going to add this and that. Looking at these raw indicators, clearly they've not been accurate just looking at this representation compared to what the fractals are able to represent. And so it's, having that kind of distinction is very clear when you put it in real terms. And so when we look at our basic chart that gives us our up and downs, we have a very defined approach to it using the fractals. And then the next step, of course, is to convert this signaling into actual systems, and by that we would create programs that will actually buy and sell based on these signals we're getting. And that would look like something like this on the ES, where we get years plus worth of trades right here, and then we start to expand it out and you begin to look at it clearer, and you can see that we're capturing all these little elemental moves based on these fractal setups, and we can define them. And so what we typically will do is we will set up a performance report based on what these trades actually are, and we actually just then go to the numbers. So we look at profit factors, win rates, then we can look at overall performance graph and see how strong our equity curve is. We can then look at our analysis and decide, okay, are we getting a decent profit and loss in relationship to each other? Is it high enough for us to justify? Our annualized returns, are they decent for a 10 contract setup? And then our adverse excursion, how much of a drawdown are we getting within this? And it's very low in these kinds of setups because we're able to control these factors. So I'm hoping that this visual of my version of fractals and how they're incorporated with basic chaotic events can really give you a leg up on what the market is doing. So hopefully you'll have a chance to take a look at us and join the free trial. Trade well.